Hey, this is Jeffrey, and this is my part two of my weekend market update. Usually I go through a lot of stocks here. We'll look at a couple stocks, but I'm still careful despite the futures. So this is my weekend market MRI Pro update. Market sold off at heavy volume. Where will they open on Monday? We've got some information there. So today is not the 11th, it's now the 12th, but too late to change that. And I think everybody here knows exactly what the markets did. But here, yeah, let me go to a cleaner picture. We've been talking about the 50-day, which would be in yellow, hopefully being support. This green line here, which is the 17-day as a support. And then we've got trend lines that are automatically generated. This is Trade Station. And you could see just massive down days, and it was massive volume on the futures. But you could see stopping right at the 50 where you'd hope it would, although it did have a little bit of a bottoming tail form. Here is the NASDAQ, same thing above the 50. The Russell a little bit below the 50, and the RTI, the Russell trading, this is the YM, the diamonds rather, and the Russell trading down to the 50 with a little bounce. You can see volatility popped on Friday, closing above the 50, and the dollar came down some. Now, what we have so far overnight, it's 10 o'clock Eastern, so it's only been open for 4 hours, is we've got inside bars that are holding pretty steady. The E-minis are up 88 points, but remember they were down, well, after hours, they were down over 1,000 points. The NASDAQ, or at least the diamonds were down 1,000, the NASDAQ were down 1,000. You can see the NASDAQ, which had a huge down days inside bar, right now up 454. The diamonds, YMs, the Dow inside bar up 403. And even the Russell's up here 40.7. Volatility has pulled back and the dollar hasn't moved much. It's down just a teeny bit. So the futures are behaving. So the question will be, do we get a gap up and go or a gap up and crap? And, bottoms are not made in one day. Um, we did go so hard, so fast that there's plenty of reasons to expect a bounce, but it could still fall. So I'm not going to be deciding where the market's going to end until at least it opens and I see how it behaves when the regular rest of us come in, not just the overnight future traders. So that's where we sit. As always, it's for educational purposes only. And anything I say should be taken in the spirit of education, not investment advice. The intent is always to teach how to use my tools for top-down analysis. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always be able to consult with your financial advisor before making trades. And I use my app on most of these videos, but you just saw my tools in TradeStation. I can duplicate everything in TradeStation. Almost everything as I do in the app, soon to be in MetaStock, and then have some TradingView indicators as well, and my wealth chart scanner. My Google group is called Top Down Trader. Sometimes we'll go intraday and make some comments during that. You're welcome to join us there. Happy to have you. I'll just leave it at that. Google Groups, look for Top Down Trader. Um, Thanks to the flurry of interest that's happened since over the last week, now we'll probably be at 10 people in the room, which means there's only 2 spots left. October 20th, and Joel, that includes you. October 26th and 27th, Palm Beach, Florida, and the Marriott Palm Beach Gardens, less than 15 minutes north of PBI. You don't need a car, just Uber. You can Uber to the boat as well if we don't have enough room in cars. 2 packed days of education, $12.50 with a $4 rebate towards any of my tools. The rebate triggers the minute you pay for the session, meaning you can buy my software before you even go there and get that discount. Hotels 155 a night. For more information, Jeffrey Scott, Market MRI Pro at gmail.com. And the initials DG, one of these days you got to come to one of my events. We just talk about it. I know your daughter's probably an SMU cheerleader and it's homecoming, but you know who you are. And then, as I mentioned the other day, we had Hindenburg Omens fire on HDSI, on Edge Radar, on the composite and the Q Edge tool, as well as a confirmed on the NYSE and unconfirmed on the NASDAQ. So when you see Hindenburgs all over the place, not thinking that this is over. I hope it's over because I still lost a few bucks on Friday. I'd done a lot of hedging and took some profits. Um, but I still lost money, which means I will make some money if it goes up. But I think it's where it closes, not where it's open, that matters. And look at this day here. I hope we're not seeing another one of these. I don't think we are. So also had person sell signals come in. We had pocket pivots to the downside and a couple of kahunas on HGSI. So enough there to keep me a little bit concerned. What we didn't see though were phoenixes, which makes me wonder. If we look at this week, we've got another big week of Fed speakers, but this week will be extra painful because we're not going to get retail sales. We're not going to get the PPI. We're not going to get the Philadelphia. Well, we may get the Philadelphia Fed. We're not going to get housing starts. But there's a lot of data that we're not going to get this week unless something happens and Congress surprises us and comes to an agreement before the end of the day on Tuesday. And I don't see anything that's come back that says they're settling. Earnings start in earnest this week. I mentioned last week when we saw Delta that it was the beginning of the earnings season, and you could see there's plenty of earnings. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Let's go take a look at charts. Let me do a very brief market review. I'm not going to teach. I'm going to tell you what I see. It's just if we look at the common ETFs that we like to follow from Friday, volatility was up 12%, the dollar was down 0.5, and you could see down 188 on Friday on the diamonds, 2.7 on the spider, 2.99 on the Russell, 3.47 on the Qs, and another 3.7 on Bitcoin. Bitcoin still had a strong week. Um, Actually, it was having a strong week, ended up finishing this week down 5%. Q's down over 2, Russell down over 3, Spider down over 2, and almost 3% down on the diamonds. It was a rough week. And notice that the index ETFs finished at the bottom of their range on Friday, which is also depressing. If you look at the 52-week new high minus new lows on the NYSE and NASDAQ, they flipped negative because the number of new lows massively increased. If we look at the S&P 500 sectors, the only thing that was up was staples, and then the next 3 or 4 were all defensive: staples, utilities, real estate, and healthcare. Technology, discretionary were 2 of the 3 worst, and energy had a bad session as well. Perhaps the most indicative of the bad day in the market was only 9% of the S&P 1500 were up, 12% of the NASDAQ, and 12% of the NYSE. The timing model on the daily flipped to a sell. Bongos, break of the WMA, and a flip to a red there. I don't want to wait for the weekly to print. Just trust me that the weekly did not change, except we got a weekly bongo on the diamonds. And we'll come back there later and see. What made me feel like we weren't blowing up was the fact that on the Guppy charts, which is just a bunch of moving averages from 50 to 300 by 25 points, we are still well above the moving averages on the weekly moving averages across the board. And when the markets break down, this is what happened in April. Not only do you break down into the band, but you start to see some rotation of the moving averages. And we haven't even gotten close to the band yet. If we look at the US index ETFs, um, pretty much the story is major breakdown, pulling in almost the 50, although intraday on the futures, they took out the 50. Spiders, Qs, diamonds, and the Russell all look like they want to come to and probably touch and then decide what to do with that 50 um, day moving average, which we've been hoping will be support. VIX had a strong move on Friday, no surprise, was up 33% on the VIX futures, but it still has a very, very long way to go. And you can see dollar uh, ran up towards that 200, which we've been talking about, but it failed at the 200 and came back down. So it's stuck between the 50 and the 200. If we look at the commodities, gold and silver have been on fire, and they had inside bars on Friday and were actually up with the entropy in the market. Gold up 1% and silver was up also about 1%. Oil broke down, must be some concerns about demand and increasing supply. Natural gas is broken down. And I guess one thing for the bulls to like is a 10-year fell 2.4% and a little bit over 2% on the 30-year. So the rates have come down. That should take some heat off the market. Um, as long as we stay below this 200, I feel really good about rates. I don't want to get above 5% on the 30-year. If we go and we look at the buckets tool, this is one of the things that said we could be close to a reversal. NYSE at 37% of their stocks below their Bollinger Bands, 44 on the S&P 1500, 24% on the NASDAQ, and 42% on the Russell. Now, outside of a recession, which we're not in, sometimes you don't know you're in one until after they let you know. But since we're not in a recession, I don't think it's an issue. It doesn't usually get much lower. So this tells me that we could bounce as soon as Monday based upon being overly stretched. Doesn't mean we're going to go back to a bull, but it means that we fell so much you'd expect some kind of a bounce. If we look at market breadth, you could see the fall in the NYSE and the NASDAQ composites. You could see that the stocks above the new highs across the board fell, and the new high, new lows, AD lines, and up down volume were all bad. Now we did see a Hindenburg Omen fire here, which is still confirmed because it's within 30, 35 bars of the prior Hindi. Um, we're going to change the makeup of our NYSE and we're going to start filtering it for yield. If it has a yield percent, word bond, fund, preferred, we're going to try and filter those out so that we get a cleaner group of NYSE common, which is why I think some of the other programs had more Hindis than ours. Weakness here. The ratio charts, I think the most remarkable thing was Staples popped, healthcare is crazy high, utilities popped, real estate's trying. Utilities have a double whammy. They're defensive and people like them. They've also been hot with the data centers because of the issues around electrical generation. The things that have been leading, technology weakened, and you could see discretionary has become weak. And if we look at the market breadth, the larger tool, um, when you look at it like this, it looks like your RSIs have bottomed, your AD lines have bottomed, but they haven't. You got to make it skinny and bring in a lot more data. And when you do that, you could see that the March, April timeframe, we hit some previous lows. Um, it all changed. Try that again. Things got much worse. So we still have a ways to go, I think, before I say another YouTube video that the bottom is in. It wouldn't surprise me if we bounce. It wouldn't be surprise me if we go up for a couple of days. I just think back to, let's see if go back to the timing brief here, and let's just go back. Here was a big break right off of all-time highs in 22. And what did we do? We ran, dropped, tried to, and failed, and then we broke down. I just don't think we're going straight down. I think to see a little bit of this kind of action and still go lower is very possible. Let's take a look at some stocks. First thing is, as we talked about on the top-down review, which I did briefly in part one, when you put all 34, 3,500 stocks or more, everything was down. When I look at the 2-day momentum, healthcare is the best. So let's just take a look at this. You can see there are 806 stocks. If we again look at 2-day momentum on these, the winners are medical distribution and biotech. And if we then look at 2-day momentum here, just take a look at some things that come up. These are, I don't know this company. Obviously, it had news. You could go here. Yeah, this is one that looked like they did better because of getting funding. That's always important, but it's not usually a reason for me to get excited. PTGX got taken out, so that's offer me. This is a lower price one that must have had some positive news. Of course, we don't see any news. Typically, that's what's going to drive these. Yeah, we don't have fundies on it yet, so it's probably an IPO. Let me come in here just for safety. Let's put in the filters. Acro is another one that was a takeout. TNFA, don't know it, but think about the day we had and look at these moves. I wanted to show you two of them. This is one that I think looks very interesting. Big gap up and a run, and then it gave us a cup, a handle, and a breakout here. And this has got some antibodies, I believe, for some GI therapy. They came out, so they got enough money for the next 3 years. An expirative ulcerative colitis treatment, something that runs in my family, and we're always looking for better therapies. A lot of excitement about their treatment. That's what caused this big gap up here. And the other one that I liked a lot was Zymeworks, CYME. And the reason why I liked it, when I tighten it up, it's definitely a cup and a breakout here, and even a little bit of handle over here. That's a person buy. And think of the day we had, big volume, breakout momentum out of a squeeze, relative strength and OBV look good. Yes, it's extended, but right now biotech is leading. And then what about the three that I always talk about, some of my favorites? Core, COR, which is Cencora, breaking out from some consolidation. McKesson, two of the three big distributors, breaking out, trading just off all-time highs. And then the other was CAH. So as we get near the end, let me just make a few comments. And here's Cardinal Health. Again, things that are in uptrends and doing well and do well in bad markets. Here's my comments. I highly doubt we're going to go and set new highs in 2 days. It would be highly unusual considering the big run that we've had off the bottoms, the April 8th, 7th bottom, with the divergence we've had, for us to run to new highs here. I think it's possible that we have a little pop and then we pull back. Maybe we go up over, we consolidate and then we go higher. Certainly a break above the prior day's highs would be very bullish. I just expect us to run up and fail and maybe do some consolidation here. That would be fine. If that 50 holds and we just go sideways, that's building for the next leg up in November and December. I just don't think we go back to new highs straight away. The other thing, for those that have the program, let me show you some of the new things that we'll be launching hopefully later on tonight. Let me close this. Yes, and let's copy this. Praveen's been working hard with some feature updates, and some of the features that I've been asking for, and I think some others. Let me just show you a couple of things. Oh, problem with shortcut. No, so I'm going to pause it. I'll be right back. Okay, I'm loading up the new version. Give it a second. This one will update you to 1.33. So here's a couple of the key features. One, if you hit the question mark, you're going to start to get, we're going to start to build this out. So you'll be able to get your help file will be built in here. This will be on the cutting and pasting, adding symbols. The other thing is we created do-it-your-own ratios. So if you come into, and I want to create a ratio chart, let's say of the spiders versus the Qs, I type in SPY, and then I come over here and get the divider, and then I go back here and I type QQQ, hit enter. What we should get is a ratio chart. And there's a ratio chart showing the spider has been underperforming the Qs. That's cool. Something else we could do is we could create our own customs. How about we want to know the spider, but what does the spider look like without Apple, without NVIDIA? So this would show if you took out Apple and NVIDIA, how bad the spider would look like. How about we want to know, create our own fangs? So let's see, F used to be Meta, META, that's, whoops, start over here, META plus AAPL plus AMZN, whoops, plus Google plus, you got to click back in there, GOGL plus Netflix. And let's just add in NVIDIA. Now you're going to see your custom Fang chart. So you can create your own symbols, you can create your own ratio charts, and hopefully within a couple of days we'll have this as a line chart, not as candles. That was one thing. Now, another cool thing, let's see if we fixed it here. Okay. Let's say I want to put my layout on this. You come in here and I could drop down that gear and I'm going to call this JAS layout test. I'm going to save it. It's going to put it right there. I'm going to go over to the ratio test. I'm going to highlight this. I'm going to drop that down. I'm going to click on it. I'm going to hit yes. And it even works with ratio charts. Look at that. So I was able to bring over all my indicators. There are a number of other improvements. I can't remember them all at one point in time, but I wanted to show you the help file and the new bringing over a layout as well as the ratio charts. That should be posted hopefully sometime today. You guys be careful tomorrow. Don't let your emotions drive it. You have plenty of time to get back on the bull or avoid the bear. I may just put a horizontal line above Thursday's bar and below Thursday's bar, and I may keep my hands off the trigger and let it sort itself out. A break above Thursday's high, maybe the bull's back in charge. And a break below that tells me we got some more problems. You have a great day on Monday. I'll see you Monday night.